The US dollar has staged a massive reversal this week following the election of President Trump, or the re-election of President Trump. So is this the end of the dollar? You know, I think this next week is going to be the most pivotal week for the dollar yet. We have our jobs report on Friday. Most economists are expecting that the US economy is going to create 10 to 15 to maybe 20,000 jobs this next week. Well, if that number comes in below expectations, and we come in with a negative number and we lose jobs, the dollar might be set to be sold off for the remainder of the year. The flip side is, if the number comes in better than expected, maybe the dollar will stage an epic rally going into year end. My name is Blake Morrow with Forex Analytics, and you're listening to the week ahead video. And actually, you guys are in for a real treat. Grega Horvat, who is our in-house Elliottician for Forex Analytics, he's going to be delivering you the week ahead video this week. So make sure you all stick around. But before I transfer you over to Grega, I need to mention this, that up until December 2nd, that is actually on Monday. You're watching this over the weekend, over the Thanksgiving weekend. On Monday, up until Monday, we are having a cyber sale for Black Friday and Cyber Monday, 30% off any assessment, a reassessment, and this is for the Trader Funding Program. Now, the reason why the Trader Funding Program is so amazing is because it's a one-step assessment to access up to $1 million of trading capital. So for those of you that don't have access to that type of trading capital, this is a way that you can access that type of money. And it's not putting your own money at risk. You're trading our money. So take advantage of this 30% off only till December 2nd. And I'll tell you, our assessments, they are a one-step assessment, not multiple steps, very simple rules. You have to make 10%. You can't lose more than 6% on a trailing basis, trailed to your high watermark. And you have unlimited time to do it. Plus, you get Forex Analytics, and you can be inside of our community and use the Forex Analytics tool to take advantage of the Trader Funding Program. So what are you waiting for? Make sure you take advantage of it by December 2nd or on Monday. 30% off. We've never offered anything like this for the Trader Funding Program. Well, without further ado, I'm going to pass you over to Grega Horvat, and I personally will see you on the Face Show Monday, the last day of the cyber sale.
So thank you, Blake, for this intro. Now, finally, after a few months, I'm again here working on analysis for week ahead for Forex Analytics members, and I think that we will have a very interesting potential new trends in 2025. So let's see what we have regarding the US dollar first, and then I will walk you through some of the other analyses and markets as well. So what's happening? Well, as you know, US dollar is still in a very nice recovery. It's been the case for the last for almost 2 months now, but keep in mind that we are seeing this move based on Trump taking the office in January. But keep in mind that we have seen some very similar pattern here for 2016 at the start of 2017, when dollar also moved to the upside when Trump won the US elections, but then in January market reversed, and now we could be in a very similar pattern here. So I think that that's a wave C, a contra trend movement of this corrective rally from 2023 lows, because that before that we clearly had these 5 waves down. So I think that early next year we could see potential reversal to the downside. But before we may say the top is in, maybe it's not a bad idea to keep an eye on a smaller time frames charts, because this wave C should be structured by 5 sub waves. And if you look closely now on the 4-hour time frame here, well, you can see that we have waves 1, wave 2, nice, wave 3, wave 4 that is now testing the trend line support here. So possibly another push to the upside is missing before market maybe will reverse to the downside. But if we see, let's say, this market breaks the trend line and then even we see an overlap with 104.65, then we will say that this impulse is completed, that wave C is done, and that we are headed lower. So for now, it looks like that next week will be very important. We will also get some new jobs data in the US, and maybe this will define the next leg in the on the intraday charts here. But as I said, maybe we'll get just another final push to the upside before market finally puts in a top. Also, it's not all about the US dollar, as you know, it's also about the euro. And if you look here, before I go to the euro dollar Elliott wave analysis, if you look here, the large speculators, right? Well, keep in mind that they are heavily short, and we are seeing some very similar price levels compared to back in September of or October of 2022. So we are now exactly in that area. So if we are just based on this sentiment and positioning, we may see final stages of this euro weakness before we potentially will turn to the upside. Also, the ECB will maybe look for just maybe one more or two more cuts, and then this sentiment obviously will turn around, because a lot of this euro weakness is obviously coming also from dovish ECB. Also, if you look at the wave counts here, it's the mirror picture compared to US dollar, obviously, but as you can see here on this basic technical picture of the classic Elliott wave pattern, I believe that we are in very late stages of this wave C. So maybe the 61.8% could be very, very important if we get another dip. So if we get a bit of more weakness, then you are now seeing the price at resistance here around 106. Also, this recovery occurred for this Thanksgiving holidays, so maybe when new normal flows will come back, there is possibly a chance that we will see a final push to the downside before market turns higher. But same thing like we've been discussing with US dollar, if we are going to see an overlap with wave 1, 107.64 is here on the euro dollar. This is an invalidation, especially if we see a daily close above that level. I think that the low is in and that there could be even opportunities on the upside. Now, looking at cable, cable touched this potential triangle extended trend line here. So if we can hold here and stay above 124, 124, 150, 125 level, then possibly even we will just keep consolidating here. Okay, so overall, I just don't believe that cable will continue straight to the downside. I think that next year we will see a stabilization, and if we will be able to count and to recognize some bullish impulsive structures, meaning that the rise from that most recent lows will be in 5 waves, then I even think that there can be some opportunities on cable. Now, looking at Aussie, as you know, we got inflation in Australia that came lower than expected, so maybe finally RBI will be looking to lower the interest rate. So maybe this can keep Aussie in some downside pressure, especially maybe versus Kiwi, because what we have seen is that Bank of New Zealand cut the rates, but maybe that was the final cut and they will now go on hold while Bank of Australia could be looking for cuts. And this reversal in trend has been visible very nicely on Aussie versus Kiwi. But before we go to Aussie versus Kiwi, I also want to look here on New Zealand dollar. Notice that we are now recovering, somehow already showing some impulses from the most recent lows. Also, that this could be like an ending diagonal here in this wave 5. So possibly this ending diagonal marks the end of this decline, meaning that there can be more upside. So I think that this was some kind of a buy the room or sell the news impact. A lot of this weakness recently occurred to New Zealand dollar because there were speculations and anticipation that Bank of New Zealand will cut rates. But now then when they finally done it, well, we are seeing a reversal of this trend. So as I said, maybe Aussie versus Kiwi could be very interesting to watch going forward. Why? Because also from the Elliott wave perspective, we have here potentially waves A, B, and very nice but big wedge pattern. Could be even an ending diagonal. And what I really like is that we have seen just a temporary spike to a new high. We stopped at this upper resistance line before market reversed to the downside. And if you will look at the smaller time frames, you can actually see that this drop is now impulsive. Okay, you can count 5 waves to the downside. We also see some broken channels. So always when that's the case, you have a broken channel, you have a 5-wave reversal from a new high, not only for these recently new highs, but also visible and evident on a higher time frame charts. I just think that that's a very strong signal that suggests that we have topped out here. So I'm thinking that more weakness should be seen here, and I will certainly watch and observe the pullbacks very closely for potential short shorts. Invalidation level obviously is at the high. So as long this high is in, I think that there is an opportunity to catch some downside here. Now let's take a look also on, let me check my notes here, on dollar versus Mexican peso. As you know, Mexican peso has been mostly bearish because of Trump win, but of course this kind of a trend was also seen here in at the end of 2016, start of 2017, when we got a very similar Trump trade move, but then this was completely reversed in January. So I'm just wondering if maybe we could see some very similar price action at the start of next year as well. Let's not forget that this looks like an overlapping recovery, and always when you have a deal with an overlapping recovery, it means that it can be a corrective movement, because you will have very difficulties to count this as impulsive sequence, especially when the structure is also made by 7 swings. Plus, we have a potential wedge pattern here, okay, in this final wave C, known as an ending diagonal, and that's a very strong candle reversal pattern. So if we see a break below this lower trend line of this wedge pattern and possibly even start approaching this bearish level, then I think that much more weakness here could be seen in the cards. But of course, on the top side, there can still be a retest of this red trend line before we finally maybe make the final push higher, and then finally we see a top. So I think that based on this whole wave structure, we should be aware of limited upside, and that market could actually reverse the opposite. Now let's take a look on dollar yen. As you know, finally we got some very interesting reversal on dollar yen last week, and as you know, Japanese yen could strengthen further because there are new speculation that Bank of Japan will possibly look for new rate hikes, and certainly they are not satisfied with this rebound on dollar yen, so maybe they will look to bring Japanese yen higher, and this would also help them with an inflation. And what we are seeing here regarding the technical picture, well, notice that market recently stopped at this very important resistance, 156 up to 158, and now we also see some bearish reaction that is trying to break this trend line. More importantly, this move to the downside, okay, occurred last week, and we closed at the lows. So technically, I think that there is a very good chance that we will continue even lower. Now, what this means for yen crosses, well, as you can see here at the bottom of this chart, we have some very nice correlations, and clearly I think that those yen crosses could continue lower, especially maybe if we also will at some point see US stock market that will turn to the downside. So I just think that it's very, very important to keep an eye on stocks. If there would be some limited upside, I think that those yen crosses that are looking very weak already now, I think that in case of a risk off, this will just accelerate to the downside. Okay, so Japanese yen, in my opinion, could do quite good. Now, if we take a look also maybe a real quick here on the euro yen, we can already see that we are trying to come to the downside quite aggressively from the upper side of this flag pattern. Also, it could be the right shoulder of this head and shoulders formation. So I think that more weakness could be seen. Definitely, I'm looking for 153 in the next few weeks. Even if you look at CAD yen, CAD, as you know, came under pressure as well because of Trump policy regarding tariffs, and maybe this one will stay weak as well here in the next few weeks, maybe even months. We stopped very nicely and perfectly at this resistance area above 110. More importantly, the recovery has been made by 3 waves, plus you had this wedge formation here. So this kind of a wedge formation actually told us that this is the final stages before the market may reverse to the downside. And so far you can see that we have some very nice bearish impulsive activity. Even on the smaller time frame, we can clearly count 5 waves down. So I think that after a rally in 3 waves, there should be more weakness. So I think that there are going to be some very nice potential opportunities on the short side of this pair, and I will clearly have a very close eye on those pairs in the next week or so. So again, make sure to check our offer we have on Trader funding program, we have the 30% discount as Blake mentioned, and if you will apply for this, you will also get the free access to our analysis as well as my Elliott wave charts as also. Now, if we take a look, go further, here is the S&P 500. So what we are seeing here, well, we are definitely in uptrend, no doubt, but keep in mind that even these uptrends, there will have some pullbacks, okay? And you can see that we are now trading around 6k resistance. There's also even higher resistance at 6200, but at some point next year, I think that there will be a new pullback. So keep in mind that we are in a very late stages of this recovery, and if you will see this retracement, as I said earlier, then maybe these yen crosses will extend much lower. So of course, sometimes stocks can make some very strong sharp reaction to the upside, but based on the pattern, based on the extreme levels that we are seeing right now, I just think it's a bit risky to be long from here, okay? And rather be prepared and aware of this wave 4. And whenever this wave 4 will show up, that's when new opportunities will be visible on the charts. Now, we will take a look also on metals, but before we go to metals, I want to look at this correlation where we have gold, Hang Seng Index and Chinese yuan. And you can see that Chinese yuan has recently came to the downside quite aggressively. So I think that as long as the Chinese yuan is under bearish pressure, I think that metals will maybe stay sideways or possibly even correct deeper. So it's very important for me to see where dollar versus Chinese yuan is headed. And if you look here maybe on this chart, you can clearly see that from an Elliott wave perspective, we have this bullish impulse and then you have a free wave corrective setback. So looks like that's a new recovery for dollar Chinese yuan, meaning that maybe we are going to see a retest of these 2022 highs before we turn aggressively down in 2025. So for now, as long as we are here in uptrend, okay, on this dollar versus Chinese yuan, I think that gold could actually stay sideways here or maybe even correct deeper. I definitely do not see opportunities and I would not be looking for gold longs while this pair is trading to the upside. And also if you look maybe at the Elliott wave pattern here on gold, you can clearly see that we reversed pretty aggressively to the downside here a few weeks back, and then we actually stayed sideways now. So I think that we are here in a first part, I should say, of this wave 4 consolidation. So if you look here at the Elliott wave map, that was wave 1, that's wave 1. You got then wave 2 pullback and extended wave 3. So you got the wave 2 pullback, extended wave 3. And now we are in a new corrective retracement. So this wave 4, okay, this black wave 4 could be similar to this black wave 2. It's very unusual to see wave 4 such small compared to this wave 2. So I think that we are in the middle of this consolidation and that it may take time before the next real direction will be found. Of course, I still think that we will at some point see higher prices, but I would not be surprised if we see more weakness here down to 2,400, especially after this wave B rise, which could possibly even move close to these all-time highs before you get this wave C to the downside. If we get suddenly some more upside into wave B, this will most likely cause even more inflows because everyone would start looking back to new all-time highs on gold, potentially even calling for 3,000. But keep in mind that it's not only gold. You have to look at silver, okay? And you can see that silver has a much different and much more bearish picture compared to gold. And in Elliott wave terms, also we came out of this ending diagonal here. So I think that this broken trend line suggests that we could see more weakness after a rally. I think that $32 is a very strong and serious resistance area, 32.50 as well, from where we could see another and final sell-off here, meaning for much deeper correction, even if that would be only wave C to the downside. If let's say that we are now in a wave B, then still much more weakness and downside potential still remains in play here. Also, it's not about silver and patterns on gold as well, it's also about gold silver ratio, and you can see that always when this one is trading to the upside, silver is in a pullback, okay, and obviously gold as well, but silver then could be much more volatile to the downside. And recently, when this gold silver ratio here found the support, silver is now stuck in a consolidation and could potentially see even more weakness. In fact, from an Elliott wave perspective, this looks like a bullish pattern. You have a very strong push to the upside, then you have 3 waves down and very nice recovery. So I think that gold silver ratio could actually be headed to the upper side of this range, and this will most likely keep metals in consolidation. So as I said, based on dollar Chinese yuan, based on Elliott wave pattern, based on gold silver ratio, I just don't see metals continuing straight to the upside from current levels. I think that we will see more gains in the short term, that there can be some serious resistance not that far away. Now, also, let's take a look real quick on crude oil. As you know, crude oil is actually moving sideways, but I just think that based on 2 wave counts that I'm tracking, that sooner or later we will see a new low. So maybe that's still some kind of a triangle and that we will see a break to the downside. Of course, if we see daily, weekly closes here beneath $62 or 61, then I think that much more weakness could be seen in the cards, okay, because the move out of a triangle could be quite significant. But I have another wave count here which shows that if we are here in an ending diagonal in a wedge pattern, but even this one for the next few weeks, maybe 2 months, suggests more weakness. So even this one shows that there is room for 61 or $60 for this 5th wave. So it really will be important what will happen at these levels. We will see maybe just a spike to the downside and then a reversal higher. Then we will know that that's the wave count we should track, because after then we will start observing an ABC recovery for a wave B. So this wedge pattern is very important to have an eye on, because it could be limited downside. And as you know, if we suddenly will start seeing a very strong drop below $64, everyone will try to turn aggressively bearish on crude oil. Who knows what will be the catalyst, but still that's something that we should be aware of, because if we'll get just a spike to the downside when everyone will become very bearish on crude oil, that's when we should be very careful and maybe even be ready for a reversal. But as I said, if we'll see a daily, weekly closes at any given point below 61, then I think that much more weakness could be seen based on this second interpretation. So based on both wave counts, okay, it now seems like that crude oil can be headed to the downside. In fact, even if you look here, maybe on this smaller time frame, you can see that the most recent bounce here looks like a correction. Can be even some kind of a minor triangle here, but in either case, I just think that sooner or later we will see crude oil coming to the downside. And now finally, let's take a look on Bitcoin. But before we go to some of the charts on Bitcoin, I really want to look at this Google Trends. So this will give you or show you really nice, the most important picture regarding sentiment. As you know, Bitcoin and cryptocurrencies in general have seen a very strong push to the upside because of Trump. And now everything looks like it's great, but still everything is based on just on speculations what Trump could bring. Okay, who knows, maybe the reality will be completely different and these cycles will turn around, because usually very good positive news will occur at the end of a very good bull runs. Okay, and if you look here at the at Google Trends and search for Bitcoin, you can see that we actually are at the top, at the most extremes from the last 5 years or so. So definitely I would not be surprised if we are going to see a reversal or a top in 2025. So just be aware that there can be some very unexpected reversal. So if maybe someone is long cryptocurrencies for the last few years, maybe it's not a bad idea to book some and just be aware of a reversal rather than be surprised. Also, what may help us to identify the potential final stages of this bull run? Well, here we are looking at Bitcoin exchange outflows. Okay, so it means that this tool measures how many coins are being transferred from exchanges to private wallets. And what someone would do that? Well, because they want to keep Bitcoins safe, because they believe that prices will be much higher. And if this goes into extreme levels, it will show us extreme of optimism. And as you know, if we move into extreme phases of this optimism, it means that most likely the next cycle will be completely opposite. Okay, so if we'll see these exchange outflows, maybe even approaching and exceeding some of the previous levels, then I think that this will be very important indication that we are nearing the potential top there. Now, when we look at the wave counts, keep in mind that here, looking at weekly time frame and checking the price action from 2022 lows, well, that was wave 1, that was wave 2, that was wave 3, wave 4, and you're now in a wave 5. And in Elliott wave terminology, always after every 5 waves movement, there will be a correction. Of course, sometimes fifth waves could be very extended. Blow off tops could occur, especially in cryptocurrencies or like in commodities. Okay, so there is a chance still that we will see some more upside, but based on current fifth wave and based on time projections, I just think that, and based on these Google trends that I just showed you, I just think that we could be in very late stages here in this bull run, and that we could see a reversal in 2025. Also, if you look at the cycles here, well, each bull run since 2022 lows lasted between 20 weeks and 26 weeks. Okay, and if we compare this from the most recent swing lows here, from August, September, then we get then we come out with time projection for potential top between end of December and end of January. That's actually the time when Trump will take office. So I think that this could be pretty interesting to see if maybe we'll get some very sharp move to the upside and then suddenly market makes a reversal. I still think that FOMO here is missing, and that obviously that after some setbacks there could be more upside, because if you look at the smaller time frame, let's say maybe just on a daily chart, there are still not all 5 needed subwaves here to fully complete this wave 5, right? Also, maybe in the short term, why I just still think that there will be some push strong one above 100,000 level. Well, you can help with this liquidation heat map. Okay, this yellow color actually shows us, or green, shows us that where are a lot of stops, and you can see that there are a lot of stops here still sitting just around 100,000 level. So obviously we know how market works. Where there are a lot of stops, market could actually spike towards this level before reversal. So everyone is just waiting what will happen around 100,000. I think that we could see some spike to the upside and then suddenly reverse and pull back for a consolidation. There will not be just an easy follow through. There will be some back and forth moves around this level, but maybe we'll see, as I said, after some consolidation, we will see another very strong push to the upside. But then in 2025, I just think you will have to be aware of potential limited upside. But if you're looking more like a short-term trade setups, I think that 85,000, if we suddenly see a new dip, is still a very good and interesting level. But well below that level, I just think that you should be prepared on some bigger correction. Okay, traders, thank you very much for watching this video. Please let me know if you have any kind of questions. Once again, I invite you to check our offer at forexanalytics.com, and you will get access to full analysis. Also, I will give you updates through the week on my Elliott wave charts. Traders, good luck and talk to you soon. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.